Hello and welcome to LAT's Weekly Market Insights. It may be a new week, but the story is much the same. It's been yet another week of bullish moves in the industry markets, with the tech sector and US indices leading the way. The economic calendar this week was dominated by the eagerly anticipated Jackson Hole. Jerome Powell unveiled plans to target 2% average inflation, and whilst this is mostly priced into the market, we still saw an increase in volatility and ultimately resulted in a broad strength for the industry markets. However, with a shift in monetary policy and markets having priced in this move, could we be about to see a buy the rumor, sell the fact trade? As we have a look to the charts, that's certainly how the morning session is shaping up, with industry markets across the board lower on the day. As we look to the Dow Jones here, we can see this all-time high at 29,600. As of yet, that all-time high has not been tested and broken, unlike in the S&P 500 and Nasdaq. With previous resistance here at 28,150 having been broken last week, it opens up potential upside moves towards that all-time high. As we look towards the 4-hour chart, we can introduce our Fibonacci extension to try and understand where potential resistance may come in on our way up towards those highs. And it would appear we're testing that 61% extension as we speak, where we seem to have found some short-term resistance. However, with that 100% extension sat up at the all-time highs, potentially this could act as a magnet for investors to continue this bullish rally. We are starting to see some signs of weakness on the European session today. However, small sell-off, aggressive sell-off this morning. Already we are starting to see bounces in this market. We must be careful at this point not to get bearish and become short too soon. We must see some clear evidence that a trend is going to reverse. Potentially that evidence could come from a break of the previous higher low. That higher low here, a relevant support level previously acting as resistance. A break below that could unlock further downside moves here in the Dow Jones. The FX markets, however, went on a bit of a roller coaster ride as the major currency pairs whipsawed around, testing both the upside and the downside before returning to spot price. The lasting tone for now is broader continued dollar weakness, which has allowed cable and euro dollar to move higher. As we look towards the dollar index here on the 4-hour, we can see that major downtrend remaining intact. We saw multiple attempts of the 61% Fibonacci retracement region before ultimately yesterday Jackson Hole opened up the possibility for further downside moves. Bit of patience required here on the hourly chart, a break of that counter trend line and then a deep retest, but failing to break through the previous high, testing it once and twice before moving lower. Now this broader weakness in the dollar, as mentioned, opened up some potential upside moves for cable. So we have a look, very similar chart to the dollar index here, but a bullish move. The higher highs and higher lows still intact here on the 4-hour chart. Key support holding in around that 130.50 region. Be interesting to see here now what happens. We've made our way back towards the high of this move and also the top of this channel where we have recently this morning respected those highs and in the process of forming a shooting star formation, a bearish reversal candlestick pattern. 45 minutes to go left here on this candle, but could this be a resistance region here for cable? Oil shows signs of weakness as at a previous weekly support level. However, prices remain 1.6% up on the week. Oil continues to battle with supply and demand issues. Demand for oil still not back in the market as COVID continues to hamper progress. With Hurricane Laura now disrupting oil rigs, this reduction in supply could keep oil afloat. However, initial reports suggest that there is no lasting damage to the upstream or downstream facilities, potentially paving the way for oil weakness as that supply surpasses demand. As we come across to the chart, we can see that quite clearly. We'll introduce that weekly level. Okay, and we can see it relevant back all the way back here from 2016, where we see support once, again in 2017, a big rejection of the level late 2018 before we broke early in 2020. So we move into the smaller time frames, we can see that top resistance level there, that weekly level now being tested and being respected this week. We can also see that buying pressure reducing on these highs, that loss of momentum potentially could spell further downside moves here for oil. However, we must, as always, respect that trend. And so long as the higher low here remains intact at that $41 a barrel region, there's no reason to decide to be too short oil yet. In other news, it's been confirmed that overnight Japanese Prime Minister Abe resigned due to health reasons. This, alongside markets processing the Jackson Hole implications, introduced some uncertainty and volatility to the markets, dragging the Nikkei down by 1.4% and putting some short-term strength in the yen. As we have a look to the Nikkei here, we can see the move that unfolded. However, despite that being a fundamentally driven move, technicals here still in play. We can see clear breaks of hourly support levels, rejections of hourly and 4-hour resistance highs, and now failures to close below hourly support. Last but not least, Donald Trump has officially accepted his nomination for his second term in office. No doubt now the pressure will ramp up and we'll look towards his campaign to see how he's going to tackle the ever-present threat of Biden running against him for president. As we look towards next week in the economic calendar, the RBA are in action with their next interest rate decision. Expected unchanged at spot 2.5%. We'll be looking for any statements that may follow on from that decision. As we look towards the tail end of the week, it'll be non-farm payrolls. And again, we'll be looking to see if that can keep this bullish rally intact for the US indices markets, or if that potential correction is on the cards. That's all from us here at LAT. Please do join us again next week for another weekly market insights.